One specific example that I lost 3 nights of sleep over last week. It was driving me nuts. We had a client in a perfectly aligned opportunity to take hold of that gray area, run with it, and almost guaranteed, can never guarantee with the IRS, but highly, highly likely prevail and save $3 million in taxes. Unfortunately, the seller of this property was a big national firm, and they never heard of doing this. And unfortunately, the client didn't have any leverage because they were in a rush, and there was good business reasons for it, but they didn't make a contingency, so we couldn't even get the sellers and the seller CPAs on the phone until it was time to close. We finally got them on the phone, and here's the deal. The seller of this property, they're a big business that buys and sells properties and adds value, turns them around all the time. These people, I guarantee, are paying too much in tax because they got their 3 partners, I think 2 partners and a senior manager from this big national firm, on the phone, and I started explaining them the rule, and they're like, well, I've never seen this, so it can't be done.
Welcome to another episode of the Hidden Money Podcast. Today, I am just very excited, and Mike is too. First, we got a little housekeeping because we have filings for partnerships and S-corps due in little over a month. So you have about a month and a half, partnerships, S-corps, for all you people sitting on some financials, our clients. Let's get that stuff in because if we don't get your data, we can't guarantee timely filing. So that's the first housekeeping item. And next, we just want to also talk to you about what other CPAs may be missing. We often hear that when a client comes to us, they're like, I never knew you could do that. What? Are you sure that we can do this? And we're like, yes, we are 100% positive we do this all the time. So CPAs out there, they often stick in a lane. And what we see, and I guess I won't speak for you, but for me, when I get on the phone with another CPA, when a client comes, I try to bridge that relationship and say, hey, here's what we're trying to do. And they often just don't even want to look into it. They like, no, it's been done this way for 30 years. I'm going to continue on this path and not go off of it because one, it takes risk, it takes effort, it takes research, time, and it challenges them. And some CPAs just don't want to be challenged.
Yeah. We've got so many examples of this, but no, I agree with you. I see that way too often. The fact is most CPAs, they're not entrepreneurial in spirit, right? They chose the profession because they like being in a nice, safe box. And that's where we're different at Revo. That's our entire team. We're growing our team to be, look, okay, we need to learn the safe box, but the entire tax code and all of the IRS revenue and audit procedures are designed to recognize most of the tax law is gray area. If you just stay in the black and white, you're missing out on so many opportunities that you're very likely legally eligible for. And that drives me nuts. So the law says you have to have a more likely than not chance of prevailing under audit to take a tax position. Why would the IRS or the Internal Revenue Code actually have that rule if everything was supposed to be yes or no, black or white? They're not. And unfortunately, most CPAs, they're not. They've lost the advocacy for their clients. They're supposed to be. They're being paid by their clients. They're supposed to be advocates for their clients. They're supposed to be looking out for their clients and recognizing the IRS. They want things to be black and white. They're always on the very conservative side, trying to raise as much revenue as possible. They never recommend gray areas. But gray areas, when the facts and circumstances actually support it, those are legal, reasonable positions. And we got so many of those. It's going to be hard to keep this down to 25 minutes today.
It is.
But let's get started.
That's a important part is I think also a lot of CPAs, they get into their safe box. They want to be an accountant. They like just doing desk work. Not all CPAs, but most CPAs do not get into this practice because of the relationships, the client relationships.
Well, just go look on any college campus that has an accounting program and go to the accounting program building. Go interview some of those people. Just go say hi, meet them, see if they even talk to you, if they give you eye contact. And then go to like the places, the business management or entrepreneurial classes, and you'll see a complete difference.
The way different personalities.
Yes.
So the people that are, yeah, you're right. The people drawn to accounting typically have that more reserved, conservative, maybe not personality type. But a lot of our job, you have to get to know the clients because like you said, to live in the gray area, you can't live in the gray area without knowing your client, without knowing their business, without knowing their facts, without knowing the details of the deal that they're trying to do. I mean, you have to get on a phone, get on a now Zoom meeting, or at least bare minimum, start an email conversation of, hey, tell me what's going on, and then I can advise you further. Some CPAs don't even want to dive into that relationship aspect and get to know their clients on a monthly, quarterly, or even twice a year basis. And we encourage all of our clients to at least twice a year. We offer free what we call discovery calls for every preparation client. So we have 2 lines of service, right? We have our preparation, which satisfies that accounting department feel of what
the tax prep,
a tax prep would feel comfortable doing, right?
Yeah.
There's still, you got to still communicate and talk and all that stuff, but that's more traditional tax work. Then we have our tax planning arm. Now not all tax preparation clients are planning clients, but we always sprinkle in one aspect of planning in every preparation engagement. So every preparation client does get what we call a discovery call, which is you and me currently, and we just talk with the client. Hey, how did your 25 return go? We briefly review the 25 return. We get caught up on what was prepared and the positions taken. Then we ask, okay, this was good. What's going on for 26? Let's look forward, enough looking back. Tell us what's going on in your life today and the rest of the year so that we can get ahead of something. And we want to touch base with every client. That's a free service we offer, you know?
It's a requirement to actually strategize during the year, to be proactive, is to have a conversation about it and find out what's going on and what's changing, what's changed in the laws. But to be fair, I don't want to sound like we're just pounding on other CPAs. It's not most CPAs' faults that they like being in this black and white box. This is how our profession has evolved over the last 110 years since the 16th Amendment was passed. We have been conditioned. We're conditioned in school. We're conditioned in the firms we start at. We're conditioned on the CPA exam. We're conditioned on IRS revenue procedures to just make everything black and white, move it to the most conservative side. But again, like you said, the gray areas, you got to be careful with them though, because we have one client I can think of right now that absolutely was eligible, and I'm confident that if the IRS pushes back, he'll prevail in this one position. But then we had another client, very similar, almost the same business deal, but a little bit different. They wanted to take the position, and it is gray, and it was more likely than not, but instead of being like 90% likely or 95% likely of prevailing, it was closer to like the 55-60, and we had to explain that to them. And that client actually didn't want to take the risk. Trust me nuts. I mean, at 50, would you go gambling if you had a 55% chance of winning every single hand?
Yeah, I mean, law of averages tell me I'm going to come out ahead.
Heck yeah, but I mean, that's also important to have that relationship with the client though, so you can explain the risk and let them decide, because they are going to take risk if they're taking an aggressive position.
100%. And yeah, I don't want to beat up on CPAs either. I also think, like, as a firm owner, I can see the revenue model side of things. It's like, if I'm going to stay in my black and white box, I can push 10 returns out comparative to I'm going to look at every return independently and get with that client. That's time, that's effort, that's changes, that's margin.
That's profitability.
That's profitability unless you have a revenue model that captures that value add, which you should have. But a lot of clients or a lot of CPA firms don't. They might charge by the form. They might charge by hour. They might charge by whatever metric they have in their firm. But you are trained, I'm going to get out 30 tax returns this week. And for me to pull a tax return aside and say, I can save the money, it's going to cost me 10 hours, which is two more returns or whatever it is. That's a hard sell to some entrepreneur CPAs. And even being a senior or a staff member in a bigger firm, you're looked upon your profitability. Partners are looking at your profitability, your timesheets. They're looking at how many returns you're moving, client satisfaction, all of that. So it all kind of plays into that, to where cultures in firms are also pushing tax prep speed instead of value-added planning.
There's one other element to that, goes into that though, on the fee side and the profitability side, is it's also partially on the clients too, on taxpayers, and they're y'all's fault. It's y'all's fault sometimes. You go to H&R Block and they'll prepare your return for $500. Or you can go to a local single shop CPA or two-person CPA firm and they'll do it for $1,000. And yet you want, or you should want, better service, more strategy, actual value added from your preparation. You'll pay them $1,000, they don't save you any tax. Or you'll pay H&R Block $500 and they don't save you any tax, unless they make an error, which they have. Well, that's not good. I don't want to get sued. For us to do what we do, we got to charge a lot more. We got to pay our staff a lot more to keep the right people that can think outside the box, that are comfortable navigating the gray area ethically, right? And that's more expensive. So we get a lot of people that come from these CPAs, that come from H&R Block or come from TurboTax, and they're like, man, I haven't been paying more than $1,000 or $1,500 a year. You want to charge $5,000 for my tax return and consulting? Yeah, we have to. And a lot of them say, no way. They're penny wise and pound foolish. So sorry, you, the taxpayer, also place some of the blame there. But you need an advocate that's teaching you and telling you and selling to you and pushing you. Get out of that comfort zone. Get out of that old-fashioned paradigm. Get out of it. Learn that normally you get what you pay for. If you're not going to pay someone to strategize with you, just go ahead and pay too much in tax. That's what most people do. If you want to leverage the tax code to keep your hard-earned money and grow your financial freedom much faster, find a strategist and pay the heck out of them. Because whatever you pay them, if they're good strategists, you pay them $1,000, they better be saving you $5,000 in taxes, $10,000. You pay them $20,000, they better be saving you hundreds of thousands. And that's what we're doing.
Yeah. And I remember when I first started kind of into the client relations piece of my career, because every CPA kind of starts off in the prep side of things. It's where you have to get training wheels. You have to know how a form works, how the tax system works, how all these pieces fit together. Then once you get comfort in that, they'll start giving you clients and actually sitting down with them. And I remember as a senior, I was charged with probably 15 to 20 tax returns a week in busy season. And the admins would just fill up my schedule. So this was
15 to 20 a week.
Yeah, and this was probably 2010 to 2014. I was there for about 4 years. But anyway, the admins would just stack meetings on me. So every morning I would come in and I would look at my schedule and I would have probably 5 client meetings that day in person with documents. So they would come in, I would take documents, scan them, prepare their return within an hour and a half, 2-hour window. If I had any missing information, I would shoot it back, but I'm on to the next client within 2.5 hours.
You have to be.
So I would work probably 10 to 12 hours a day, would be about my average. But at the end of it, it's like I was just taking documents and putting them on the page, and I'm trying to do it efficiently because I literally have an appointment pushing this client out my door.
You were TurboTax.
Yes, but I was a CPA, but yes, I was doing TurboTax work. There would be times, and this is when the bug started hitting me, as I saw opportunities, restructuring things, and I would actually take a step back and say, hey, we need to put this entity here, whatever. I would start doing that, and that's when the bug started clicking with me, but it hurt my productivity. I wasn't able to get my actual number of returns out a week, but my client satisfaction was through the roof. Like, oh, Kevin
and you were
cares.
adding value.
I was adding value, but the margins weren't there.
Because that's how the business model was designed, and it was a bad model.
And so I'm speaking from experiences, that is what we really want to go. Like, I was in charge of getting like the 15 to 20 a week out. I think last week in our entire firm, we got out, it was 17 last week. 17 among probably 10 professionals. That's almost
8 seniors, right?
A return and a half per person per week. And now
So 1.5 per week versus 15. So literally a 10x, if not more, difference from a tax prep
attention
shop
span
versus a tax strategy.
on one return. Now, that is going to pick up. Now, they're working a lot of returns at once. Maybe they might be working on 5 to 10 returns that week. But actually getting one return through our whole QC process, it's more extensive. There's processes, procedures, planning opportunities that we look at. Everything is more detail oriented to where we're not just cranking returns out. That if a client could come in and we can crank their return out, they're probably not a fit for us anyway. But I was just shocked by that number, just like, man, we get that. But I was like, man, but we're doing really good work. And even AI is expediting this. Like, we are implementing technology and things like that, which I think a lot of CPAs, if CPAs out there don't get on top of the AI and tech change happening, like it seems like overnight it's changing rapidly. Like we have seen tremendous strides in our firm of usage of AI.
Wow.
Like just going like
not in preparing the tax returns, not in creating the strategies, but in actually seeking the opportunities for us, in data mining. There's so many data points. We were just talking on the way over here. So many data points out there that we don't have the capacity to think about. There are big companies for the last 20 years that would hire data scientists that would have to manually put through this data, and they would have to limit the amount of data points they would utilize to do any kind of service or any kind of research. With AI, the data points that you can encompass and use to find opportunities, to manage your team, to improve efficiencies, it's unlimited. It's awesome. But we're talking about what other CPAs are missing. So let me try to get us back on track here. This is a little what other CPAs are missing and maybe what some clients of CPAs are missing. But I want to talk about one specific example that I lost 3 nights of sleep over last week. You remember this? I mean, it was driving me nuts. We had a client in a really cool, perfectly aligned opportunity to take hold of that gray area, run with it, and almost guaranteed, can't ever guarantee with the IRS, but highly, highly likely prevail and save $3 million in taxes. Unfortunately, the seller of this property was a big national firm. And they never heard of doing the strategy we wanted to do. And unfortunately, the client didn't have any leverage because they were in a rush, and there was good business reasons for it, but they didn't make a contingency. So we couldn't even get the sellers and the seller CPAs on the phone until it was time to close.
Like the day before, wasn't it?
Yes.
Or 2
and we
days.
finally got him, and he had delayed at that point. And so we finally got them on the phone, and the CPA, and here's the deal. The seller of this property, they're a big business that buys and sells properties and adds value, turns them around all the time. These people, I guarantee you, are paying too much in tax because they got their 3 partners, I think 2 partners and a senior manager from this big national firm on the phone, and I started explaining to them the rule. They're like, well, I've never seen that, so it can't be done. Like, well, no, here's how it can be done, and I explained the tax code. Well, but why wouldn't we see this more often? They're stuck. And not only did they kill my client's chance of losing $3 million or saving $3 million, which just broke my heart. But those are who are serving these people that are selling $20, $30 million a year of property and paying a ton of tax because it's never been done or they haven't seen it done in their myopic career, then you can't do it. Even when I was explaining to them the law behind it, the tax court case filings,
Still couldn't convince them.
I need to calm down. I'm going to need a drink here. They wouldn't even entertain the idea. And that taxpayer who's still with that CPA, they don't know tax. They don't want to know tax. They figure, look, we are paying this big national reputable firm. They know what they're doing. And they're telling me that, oh, this is you can't do this. Okay, fine, let's not do it. Move on to next year. And they're probably overpaying their taxes $3-5 million a year. That's just gone.
It's hard. And that's the thing about, we talked about this today too, those big reputable big four firms, I guess they're big 6, big 8 now, they put their staff on their same routine of work, standard of work. So like the example that you always give is you were doing complex partnership allocations on these investment funds and PricewaterhouseCoopers.
Most complicated, billion-dollar funds.
Yeah, but then you went to H&R Block for your 1040. You couldn't prep a 1040. So if I had a big partnership problem, Mike's my guy. But if I have a W-2 and some standard or itemized deductions, I got to go somewhere else. So just because they're a big firm does not mean they know everything. Now, the good thing about the bigger firms, to kind of play devil's advocate, is they probably have the internal resources. But again, it goes to capacity, time, profitability.
But yeah, they have experts in every area.
They should.
But then you look at their business model. If they send revenue over to another practice, that comes out of that partner's pocket, right? So they get these little fiefdoms, and even though they have the most amazing resources, I'd say more than half, if not 3/4 of those partners, they are incentivized by their business model to not utilize the resources that big firm has. It
Drives you crazy. And
yes.
so, not saying we have the answers to everything at all, which is, a CPA cannot know everything. It's impossible. Like, you have to leverage relationships. You have to leverage, like Mike and I leverage each other, our team. We leverage our team a lot too, saying, hey, I'm thinking this. I went to one of our team members, because I'm not familiar in farm and ag accounting at all, or taxation. We're in central
You own a tree
North
farm,
Texas.
man.
Yeah, but timber is just, hey, it's just going to grow over 30 years. There's not a lot of wheeling and dealing in 30 years. It's just weight and time. But I didn't know it, and so I got one of the team members, and I was like, hey, I need you to research, because it was a nursery. And so what we were looking at is, what constitutes in-service time for a nursery? Is it when you plant the seed, or is it when the seed is grown and it's available for sale? That was my question, because they're going to build this big barn, $1 million barn, and they're going to have equipment. They're going to have all these bonus depreciable items coming into the farm, but they're going to plant this year, but it's going to take 6 to 8 months, which puts that into 27. It takes it till 2027 for the plants to be grown to sell next summer. So I was like, can I take the depreciation this year or next year? I didn't know. I never ran across this problem before, and that's okay, but I had the capacity, I had the team to go find the answer. Yeah. And so we did a research and circled back with the client, and it's actually when the seeds are planted, and it's available for its intended use. The intended use of the nursery is to grow plants, so I'm starting my intended use when I plant.
Yeah.
So now
every sapling.
all that equipment and barn and all that, we're going to expense it this year, and we put all of our research in the binder, and whenever we prep the return, we're going to bring that research into their audit defense papers. So we're going to get a sizable deduction, and I've defended it and researched it, and it's there for the audit if they ever get pulled. So.
Whereas it would be very different if it wasn't a nursery, if they were planting the trees for timber one day, right?
Yeah.
So again, that's where it's gray area, and facts and circumstances matter, and you got to be able to navigate that. And I would argue that a very large supermajority of CPAs who are in tax preparation mode, having to churn and burn, like most business models out there in the CPA world, when they arrived at that question or saw that, it would be like, you know what? Let's make sure until they're grown. Let's play it safe here.
That's super safe,
because that's the way I've seen it before. There's no need to go and dig into this. Yeah. So, all right.
Capacity is a big thing. It's and having a team.
Yeah. I think another issue that CPAs go wrong at is they will learn a new strategy or hear about a new strategy and try to apply it and get burned on it. Because maybe one of the facts and circumstances that they weren't aware of or the client mis-explained to them was wrong or didn't fit that model. So they get burned one time and they're like, I'm not going there again. And
PTSD happens.
Yeah,
It's like, no.
I get that. It happens a lot. So that's another reason why people just want to be safe, or CPAs want to be safe, do the black and white, make sure you're 100% likely to prevail with the IRS regardless of the situation or circumstances. I had this example. We got one client who'd come in. We didn't prepare the previous return. He actually prepared it himself because he had 2 leased vehicles. He was a physician, had to drive out to 7 or 8 different practices. He was an eye surgeon, really cool guy. And he had to drive out to like these 8 different surgery centers every day. But he had 2 leased vehicles, and those were his only 2 personal vehicles. His wife had a vehicle too, but these were his 2 vehicles, and he wanted to deduct 100% leases. Went to the CPA, CPA said, you can't do that. Normally, you couldn't. You gotta have a personal vehicle, right? The IRS is gonna say no. You got personal commuting. You cannot deduct a full lease payment if you're using it for personal commuting or personal drives. It just so happened this guy lived in one of those weird communities down in Florida that everyone uses a golf cart, and you've got the grocery store, movie theater, anywhere you need to go is on this big old huge property, right?
Like a resort kind of thing? Or
yeah, like the village,
community?
like the village, but it wasn't a village, like a retirement community.
Yeah.
But it had everything there. And he never used personal mileage on his lease vehicles. If they ever had to drive off of the place, he'd go with his wife. But internally, he always used his golf cart. And he explained this to the CPA. He was like, you can't do it. And this doctor, I love his mind. He's like, yes, I can. Okay, fine, I'll prepare my return this year. Granted, he messed up the preparation, but he took it. Then he got audited. And that's when he came and asked us if we could help and support him. And during the audit, the IRS says, hey, so I see he's taking, and I represented him, I see he's taking 2 leased vehicles. Does he have a third vehicle that's his personal car? I'm like, nope. Sorry, you can't do that. Yes, we can. No. Let me talk to your supervisor. We did a supervisor conference, and I laid out the facts. I tried to lay out the facts to the line agent. He's like, you can't do that. And I'm like, yeah, you can. Let me talk to your supervisor. And we explained, showed the facts and circumstances, and guess what? No change. The guy legitimately took those. But his other CPA, who was a good, solid CPA, said, you can't do that. Why? 99 times out of 100, you can't. But in this guy's case, you can.
That's 99 times out of 100, but that one time could be you.
Yes.
That 1 out of 100 could be you, and it could, I mean, how much would those lease view, how much tax do you think if you had to ballpark it?
I think in that case, just the tax savings alone was about $23,000 that year. Very high paid. But the IRS was trying to penalize him twice that, right? So it ended up being like a $50,000 bill wiped away.
Was, yeah, defending that saved him the elimination of those penalties, the tax clawback, all that.
Yeah, and unfortunately, it should have been a 2-hour audit, right? But after having the supervisor conference, he said no. Then we had to go to a management conference, and then they said no, and they did their finding. And then we had to go to the appeal and do it. And finally, we got it through. And he ended up paying us, I think, like $25,000 or $30,000 to save $50,000. So it sucked. He shouldn't have had to pay that, but we're not in control of the IRS.
We can't control how deep they want to be stubborn.
Or how dumb they are.
How stubborn they want to be.
I didn't say dumb. How challenged they are in understanding the gray
their
area.
own, yes. Well, from their vantage point, they have to be, like, have you ever pulled an audit manual, a technique guide? If you can Google this at home too, if you just Google like 2026 audit technique or audit guide, IRS audit guide, you will see what the field agents have. It is literally a checklist, A, B, they're gonna go down this list. There is no gray area in checklists. I don't know if you've noticed that. There's not like an open-ended checkbox like, what's your thoughts, agent? What do you think? There's no what do you thinks. It is, this is the law, this is how we handle it, and there's no gray checkboxes.
And they're actually designed to cover like 70, 80% of actual circumstances, right? They design it knowing that there's chances, there's 20% chance or even maybe 30% chance. Even if you answer no to that question, it doesn't mean you follow the hierarchy on that answer or that questionnaire tree. They know that. The line agents don't. It's the people in the chief tax counsel at the IRS, if any of them are still there, they're the ones that know the law, and eventually they're the ones that have to settle or drop tax court cases when people finally push and sue. But most people and most CPAs don't want to fight it.
Mm-hmm. Any closing thoughts? I think we didn't want to beat our own profession up to death, but we're just trying to really open your eyes out there and say, if any of these stories resonate with you and you don't have that relationship with your CPA, that's probably where I would start. You need to have active, ongoing, proactive conversations with your CPA. If you don't have that relationship, reach out to us. We have capacity, we're hiring people, we're trying to grow our firm in a way that actually we can focus and each staff can get 1 to 2 returns out a week, and our firm can survive and grow and serve. And that's what we're designed for. So,
one more closing thought though. The story Kevin explained when he was doing 15, 20 returns a week. If you are a CPA out there, or you are a tax advisor, and you are finding yourself unable to provide true value for your clients, there's a lot of good ones out there, a lot of good people out there. I mean, we were just talking about the average, right? But a lot of good, smart, entrepreneurial, client-focused advocates that have handcuffs on them at the firm they're at. Please reach out to us. We are hiring. We want you to consider working with us because we will allow you to serve your clients and add value. So please go to revotaxpayer.com. Check out our career section. We'd love to hear from you and love to chat with you.
Thanks for staying with us and listening to us banter about this topic. And we'll see you on the next episode. Please share this. If you have a CPA and you're like, you kind of like slide a hand passive aggressively send them this. Maybe don't do that. But share this with a friend, like and comment below, and we'll answer any questions. And as Mike said, go to revotaxpayer.com to learn more about our firm. But we'll see you on the next episode.
Thank you for listening to this episode. Revo Taxpayer Advocacy, LLC is not licensed or registered as a CPA firm with the Texas State Board of Public Accountancy. I'm a CPA, Kevin's a CPA. We have a lot of CPAs on staff that are licensed and held to the same standard. However, when we decided to be revolutionary and change our name to Revo Taxpayer Advocacy, the State Board would not allow that and let us remain licensed. They say we have to have one of our names in the firm for us to be licensed as a firm. And guess what? It's not us that's important. It's revolutionizing the way you feel about taxes and saving you money. We are advocates for you. So we were willing to drop our firm license, even though we're still individually licensed.